Week 7 is here, and the question is, will this be yet another red week, as Nasdaq fell 1.88% last week? I was right. Hopefully I will be wrong this week, because I believe it will be yet another red week, and it will be a very volatile week. Tomorrow, consumer price index numbers will be out. Friday, import numbers will be up. Thursday, there will be job numbers, and during the week, there will be lots of huge quarter result numbers coming in. The buy signals are falling, and much more to be told. You are listening to the Stock Invest podcast, Trading Tips with Jim. I'm Jim, by the way. And for the next 30 minutes, you will hear me tell what I think will happen in the week ahead of us, and I will end the podcast as usual with the trading tips for the week, where you will hear what stocks I will buy or not buy, along with a few other tips. Stay tuned. Coming up is the market section. A new week is here, and this time it's week 7. We are already in the middle of February. I will try to make this week's podcast a bit shorter. I simply have a lot of things to do today, but we'll try to squeeze in the main things to know about the week ahead of us. Last week I told you, actually I've been telling you for a few weeks, I expect Nasdaq to have a natural correction down. And last week Nasdaq fell 1.88%, down to 11,781. But many stocks was much more down than 1.88%, because the index was held up by some major stocks like Tesla doing quite okay during the week. And as I tried to warn you in the last few weeks, easy come, easy go, and it's so typical. You are in an upstream, then you hit a red week, and profits can so easily get lost. Last week I argued, so we will go into oil and we will go into gold to try to balance some of this. Oil went okay. I will tell you a little later about Chevron, which is up 2% so far. Well, gold actually fell a little back, didn't do as strong, but in general it did better than index did. For Zomedica and Fed was a totally different story, but that is the name of the game. The question now, of course, is, will this week be yet another red week? Many signs points for a red week. I will argue a little bit why and why not. So just let's get started. The week will hold some important numbers. Now, the reason why the market fell last week, you can always find some good excuses, and some will say that, okay, there are signs showing that the Fed will have to increase their interest rates, but the market was, after I think 5 green weeks, for instance, for Nasdaq, it was just a natural correction down. It had to come no matter what. But there are so many signs saying that the interest rates will have to continue upwards, even though Powell says that he thinks we are at the top. And this week will prove some of it, because on Tuesday, tomorrow, CPI numbers will come in. And that will give an idea of the inflation. You will have the numbers adjusted for food, you will have them with the food, etc. But in general, we see across the line prices again increasing. And the only way to fight the inflation is increasing the interest rates. And when interest rates go up, stock markets usually go down, money flow into more secure items, as we repeated over and over again. So we have numbers on Tuesday, and also on Friday they will be numbered. Now, if the CPI numbers tomorrow come in good, markets have some momentum from the previous weeks, can easily go further up. We can have a very green day tomorrow, or a very red day. I have very hard to believe that it will just remain the same. Last 2 weeks I told you now you will see the volatility increase, and last week the market was up and down during a single day. I think it was up 2%, down 2%, up 2%. It was just moving very rapidly up and down. Exactly the kind of market the day trader like, and I believe this week will hold very much the same. A lot of volatility, but by the end of the week I think we will be more down than we are up, heading for another red week for Nasdaq and also Dow Jones. In addition to this, there is of course other numbers, and one number which I've been speaking over and over again is the job numbers. Now we know that the market had an insane good week 5, when job numbers for January turned out to be much stronger than anyone expected. But there seems to be some errors in these numbers, because last Thursday's job numbers show totally different picture. And I think this job number this week on Thursday will show just the same. We are heading for much more unemployment rate. That will balance some of it, because if the unemployment rate go up, then the buying power go down, and that is what Powell wants. So we actually want, sadly enough, we want unemployment rate to go up. So Tuesday, consumer price index numbers. Thursday, if job numbers remain strong, that will not be good for market, but let's hope that they will push a little upwards, could balance out the market, and again more numbers on Friday. On top of this, we have everything else. We have last week suddenly there started to pop up more confrontation with China. We had air balloons shut down over United States, and during the last few days 3 other items have been shut down, 1 over Canada I think, and 3 in the United States. And the speculation rate is very high. What is this? And we will have some answer, but it increased the tension. Now what we have to understand is, like China said, when they shut down the air balloon, they claimed it was a civilian balloon, and they promised to retaliate. And one of the things China can do is make hassle with the export, making it more expensive, or making some bottlenecks, which will interrupt the flow, the logistics of goods into US. And US and the West is very, very highly dependent on China. We produce more or less everything in China, which the COVID lockdowns and the following logistic problems showed. So we are in a situation where China may start to respond, and my guess is that they will not respond military yet, but that they will respond with economic type of sanctions. We will see what it is, but I expect that China will not just sit silent while Biden and his administration scream that China is the problem. Now, some of you may be new listeners, and some of you have been with me for a long time. It's 4th year I'm doing this podcast. And over the years, I told you what kind of conflicts would come. And sadly, I said that I believe the Taiwan conflict will come this year, actually the first half year of 2023. You heard me say this for 3 years, I think now. Everything is indicating that is very likely to happen. Now there is a lot of talks, but we see tension is increasing. In addition to this, there is an ongoing conflict in Ukraine, as we know, and it's getting more and more tense. West push harder and bigger weapons into Ukraine, and the Russia has less and less means of dealing with this situation. They are very soon stuck in the position where they will have to choose either retreating, trying to give up, or use even heavier weapon. And Russia made it clear, we will not let Russia fail. Russia will not default, and they will use tactical nuclear weapon when they think the situation is requiring it. And they have listed a few things on the top of this list. They even said that the new tanks coming in carrying projectiles, which has traces of nuclear material, is a breach of the agreement, giving them green light. Now, I'm not saying this to scare you, I'm just saying that there is so many geopolitical things now coming up, being heavy, and news can come every single day. And if this hits the market, then you can forget about the stock market. Any really bad news and the market will be hammered. We had 4 good weeks. You are in good mood. I'm in good mood. Most people are in good mood because it seems like that long, dreadful bear market has a chance to be over. But remember, the overall segment is still not totally bullish. Anything can scare the market straight back into that full downward trend. And it may very well happen. So keep an eye on the news. You have to keep an eye on the news. And you know by now that Tuesday there will be very important numbers. There will be some numbers, some job numbers on Thursday. And Friday will be another number. So prepare for a volatile week. On top of this, there will be a lot of quarter results coming out. And some of them can move the market. But in general, it's more for your information. Some of them do huge movements before and after, releasing quarter results, and that is a trading opportunity. One of these companies is Coca-Cola, coming out tomorrow together with AB&B. Today will be Advanced Auto Parts, very interesting thing. And Wednesday we will have BOGN, Cisco, Heinz, very interesting company there. Shopify and DraftKings will be on Thursdays. As I said many times before, you have to make sure that you know when your company releases quarter results, because it will affect your stock. At StockInvest.us, when you type in your ticker, we will put up a warning a few days before the quarter release, and you can even see how the stock behaved before and after quarter results. Some have a pattern and follow this pattern very closely. Now we will slowly head towards the signals, the technical side. This was the fundamental side. We'll go to the technical side very soon, but let's finish with the oil. We follow oil. Last week I said I believe oil will go up, and I have to be honest, I expect oil to go into a super rally, but it has remained very steady around 80 for a long time, but up $5 last week from $74 to $79. Of course, that was the reason why Chevron and many other oil companies went up. I believe oil will just continue upwards. I stay very bullish to oil, and I think oil is a place where you can, if not make very good money, they will pay very good dividend, but you will be a little bit more secure as we wait for all the signs to show that we are in a bear market, to have a bull market, to have a confirmation that we are in the bull market. Gold down almost $20 last week to 1,873, and I'm very bullish to gold, remain bullish to gold. And I think gold will get back to 1900 and push upwards. And for those who like the bigger picture, as I told you, this war with Ukraine, the sanction, etc., that would force huge changes in the world. And BRICS is growing. The last country to apply for membership in BRICS was Egypt last week. And BRICS and their policy, they move away from dollar into gold and other items as backup for the currencies. So I think gold will continue to push upwards. Now, the last final number before hitting the signals. As I told you, when the 10-year treasury will go up, the markets go down. And last week, the 10-year treasury went up 5.6%, currently at 374. I believe it will continue upwards. Before hitting the technical things, so you heard me saying about possible wars and all these other things. So how do you play this when trading? First off, you can invest in war-related stocks, as I told you, Lockheed, etc., and they have done very well over these years. These industries, along with food, will continue to do good. Food for many reasons, other than wars, of course. But that is one way to play out. The other way, which I recommend you as well, is to do like I do. As long as I believe the markets will fall, I remain restrictive. I do not put all my money in the stock market because I assume that the market still will go down. It is a risk. How you play with risk? I put some money into gold, some into commodities and different places around. I do not invest fully in the market because it just takes one single match and this house of cards will fall much more. I still haven't seen the huge 3 falls which I expect to end the bear market, but as I said, everything is looking much brighter now than it did a year ago, so we are close to some sort of a bottom. These were the fundamental things. What about the technical things? I like to combine these two. And the technical things, they told us that from all the stocks that we analyze, which is qualified for these signals, over the last few weeks, they've been sky high up in the 40s. And as I told you, this is doomed for a reaction down. This week, finally going slightly down. Across all boards, it's down from 41 to 30% buy signals. Still very high, but we like actually that it falls this much because it gives room for further upturn. And soon we will get to the chart, and maybe you will remember that I said we will turn in the top of the trend, which we did. What we want is for the market to react to the middle of the trend and then boost up. And having low buy signal numbers gives a stronger opportunity for this to happen. Nasdaq down from 46 to 27. And that just underlines the thing that I said, that yes, the market only fell 1.88% last week for Nasdaq, but there was tons of stocks falling much more across the line. It was a huge number of companies falling, while some of the big players remained steady, like Tesla, for instance. That caused a huge drop in the amount of buy signals, and we really like that. 46 was, as I told you, it's way too high. You have to have a correction. Now we are at 27. Things can stabilize. New York Stock Exchange still remains high, fell from 51 to 35, still a little bit high, but again, much better. London 27, Tokyo 35, and China Shenzhen from 55 to 40. Absolutely all buy signals fell last week. They can and they should, according to what is standard practice, continue to fall before they find a natural buying point. But taking out a lot of buy signals last week is a good thing, because the reaction now can hopefully will be much shorter. Now that was somewhat long introduction into getting to the conclusion, and we will look at the chart and come up why I think it will be a red week. It's so much easier when you see the chart, and if you watch, if you listen to this on audio format, it's also available on YouTube, Spotify as video version as well, and you will see the chart. Now what we see is that the market is reacting down. It had to come. The relative strength index was super overbought, but it remained strong for many weeks, now falling back. Relative strength index is being 56, still high, but what I really like is that strong support between 11,000 and 11,400 gives me reason to believe that after a minor correction this week, we might just bounce up, and that will be the best sign we can hope for in a long time. If consumer price index numbers or the geopolitical things tighten up, we can break to 11,000, and if that happens, just embrace for very, very bad conditions. So during the first few days, we will know a little bit more about the situation. There is issued the sell signals from the short-term moving average, but still buy signals from the long-term moving average and the relation between these two averages. My guess is that we will have to get the relative strength index down to some minimum 40-ish before we turn. And that should coincide somewhere by end of week. How the week actually will play out, I cannot say for sure. I think it will be very, very volatile. I think it will start down today, could even try for a slight upturn by the end of the day. The start is red and a little green. Tomorrow, much more interesting, but it will be a lot up and down. And I think that by the end of the week, we will be somewhere between 11,400 and 600, and that is not so bad the week overall. Levels to watch out for is 11,400, because if we start to break down this level, things can suddenly go a little bit faster. And as we had very, very high relative strength index, if we get into the situation with very low relative strength index, we can have even deeper falls before it turns. Heading for a red week, in my opinion, but not by much, but it will be very volatile. I will head for the trading tips, where we'll look at the actual stocks that I will try to trade during the week. Coming up, trading tips. Then it's time for the trading tips, and I know this is the part that everyone wants. They just want the ticker and name and then go on and do a successful trade. I can of course just do that, give you tickers without any reasoning, but then you will never learn the big game of trading. Last week I told you I thought it would be a red week. I want to make sure that if it gets really bad, I will not lose too much. At the same time, it could be an upturn, and if that upturn, I wanted to be a little bit into the market as well. So we ended up buying Chevron as an oil stock, and gold, Barrick Gold, ticker gold, on the gold side, because I thought these two, they can hold up if things go south. From before, we had Zomedica, which we bought last year as a penny stock, and we are trying to recoup some money in Fate. The week is over. The trades were set. As I told you last week, I was not sure if I would set the trade for Chevron and gold on the Monday, because usually I do like this. I have several portfolios, a lot of portfolios, some Norwegian stocks and different portfolios, but for this podcast series I have a trading tip portfolio, which I pick stocks which I believe will do good. I tell you which stocks it is, and I usually try to buy them on the Monday, and we'll just shortly repeat. So how and when do I buy the stock? Like last week, I wanted to buy Chevron and Meta. The most common rule is that quarter to half an hour, even 3/4 after opening, is the best time to buy. It's just a general rule. It depends a little from the day to day, but like it's a very general rule. And if you just do it every single day, the statistics will be on your side to have a good entry level. Of course, if market swings very good, gets into very red, that is another good buying opportunity. Or you hit close to what we consider support levels. And support levels, they can be derived from many things. My personal favorites are round number. They always work. In this case, you have Chevron will have support at 180, 170, even 75. So we have these kind of round numbers. Very often works if the stock is, let's say, 172. 170 usually works as a support number. Even better is accumulated volume, where you look at how much stocks were bought and sold at the different levels. You will find this at StockInvest.us. Just look at the chart. You will see some gray bars at the right-hand side. These represent how many stocks were bought and sold at the different levels. You want them to be very long underneath the price. That is a very good support level. Having a reaction back, they usually bounce up from these levels. When you have a round number with highly accumulated volume, it's even better. You can use pivot points, you can use moving averages and a few others. You can use Fibonacci. There is many ways to look at support levels. I try to keep it very simple indeed. No need to go as deep unless you day trade it, because if you day trade, Fibonacci is one of the better tools to use. Now, that was how we started the weekend. And just 1 minute before we rush through the trading tips. If I can teach you anything that really will help you, it is trying to look at the big picture, trying to understand how things move. What are the main things moving the stock? We know that the oil price will of course move the oil stocks. So if you are to buy oil shares, have a look at the oil chart. If the trend is very down, what is the chance that your oil stock will go up? It's just in general. Airlines, very dependent on fuel cost. Fuel cost of course is related to the oil price. So if the oil price go up, what is the chance that the airline companies will be a super duper buy? I argued for gold, as you remember, many weeks, even months back. Gold on the upturn, oil remaining very low, is a super good combo for the gold producing companies because they have their cost in fuel and income in gold. You can even look at different currencies. If your company is trading in a certain currency, how is this currency doing against other currencies? Some companies have their income in foreign currency and main expenses in local currency. Good example is the Norwegian company Movi, which I used to work for, the world's largest salmon farmer. They get most of their revenues in euros and dollars, while their cost is in Norwegian kroner. So when the Norwegian kroner weakens, the euro gets stronger, their income is stronger. So last week euro hit 11 against the Norwegian kroner, and they just make more money per kilo, while most of their salary cost and other cost is in Norwegian kroner. Super deal for companies like that. So there is so much big things. Try to understand these things because they will move the market. I know most of you listening to this are not very experienced traders. You will most likely jump on what moves. You hope to hit some GameStop, you hope to do something, you jump around. It's also the way to lose money. Move more steadily, move step by step. Accept that 1% is indeed good profit, 2% even more so. I am happy every time I can reach 5. In this podcast series, you heard that we knocked down a lot of huge profits. Last week, Meta was sold with 62% profit, but these are more the odd cases that makes us super happy. But in general, be happy. If we can do 3% every week, it will accumulate to a lot of money. Back to the stocks, back to the things. Zomedica, which have been open for so long time now, didn't have the best of the week last week, fell by a cent from 28 to 17 cents, still remains in plus since we bought it, but I have good hopes for Zomedica. Zomedica stays open, and I will just repeat, I believe Zomedica is a good choice. So it is a buying tip at current levels. Now, for those remember, we bought Fate in week 1 had that accident where they released numbers, and then they released news about the contract, ending a contract with Johnson & Johnson, opened down 60%, and ever since it was a rescue mission. Last week, Fate continued upwards before turning downwards and was finally out of the portfolio at 6.88%. So the rescue mission in Fate was somewhat successful, but the overall trade in Fate represents the biggest loss ever in all these years in the trading portfolio. I had to let it go at 31.54% loss, represent the absolutely biggest loss of them all. Fate is out. If Fate's full enough, I will pick it up again because I think it will push upwards to 12, but can have a correction down somewhere to the 5-ish level, 550 maybe, and then I will be back in again. We then opened 2 new positions last week. It was Chevron. Actually, it was Monday. I thought maybe it would be Tuesday before venturing into Chevron, but I saw some movements I like. I got into Chevron at 168.50. Currently, it went all the way up to 175, I think, but currently at 171.97, up 2.06% week over week. The other stock I bought was gold, Barrick Gold, ticker gold. I got in at 18.24. It was lower than that, maybe 16.94 or something. I didn't get the very best position, but I got in. And it moved a little up and down during the week, but ending at 17.93, down 1.7%. All in all, it made for a red portfolio last week, and I overall had to take a loss. Chevron and gold held up just as I hoped for. The combine of 2 of them actually made a slight plus. But with Zomedica falling down, and we had to finally take the loss in Fate, the overall realized value was negative. I believe, and I spent 20 minutes trying to explain that in the previous section, that we are heading for a red week. I will not overexposure. I will remain steady in my boat. I have 3 stocks: Zomedica, Chevron, gold. I can recommend all of them. I think they are very good at current levels. I like the mix where I'm in now, and I will just stay steady during this week because I think soon we will know if we are over with the bear market or if I will be correct that the end of the bear market will be in May. But for sure we are getting closer. If you want more stocks, which stocks can you buy? I will keep the recommendation I held for a few more weeks now. I would look at the relative strength index 21. Find stocks with good support below, low on relative strength index with a potential good upside. I saw a few biotech companies having that position. I think in Moderna, you have to check up yourself, but I think Moderna looked like it could do something this week. The rest of the cash will stay. As you know, we had a huge income on Tesla. I put half of it in the bank, and the other 2 I spread on Chevron and gold. We are just waiting, along with lots and other profit from previous trades. I'm just waiting, and I think that during next week we might again push more stocks in and get a little bit more aggressive. We are getting to the point where I think we can make much money. We made good money last year, and as I said, I think this year will be even more. But for the week ahead of us, I remain restrictive. I held back a little bit over the week. Zomedica, Chevron, gold are the 3 stocks that I'm currently in. I'm not buying any new in this trading portfolio because I believe it will be too volatile. It will be too red week. I will not waste money. On the other hand, privately, I will go in and out with some day trading, and one day I might just make a podcast section about day trading. Until then, and as usual, I hope that you will have a very good week. Soon, the sun, at least in these parts where it's winter, will get more active, more warm, and spring will be here, and have to make sure that you enjoy more than just stock trading. Enjoy life, watch a good movie, talk with friends, and hopefully you will be back next Monday when the next podcast will be out. Until then, have a super duper week, put some green in your bank, and we will speak in just a week. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you